And one of the common structures in the United States that we don't use in Canada is an LLC. Okay. And my assumption here with my minimal knowledge of US tax is that LLCs are great because it's essentially a flow-through entity. It gives you the protection, the legal protection or the liability protection of a corporation without the potential for double taxation because you flow out the losses and gains and whatnot. So we do have, and similar to you guys, we do utilize LPs or limited partnerships to achieve that sort of thing in Canada, but we do not use an LLC. And one of the problems from a cross-border taxation perspective is that an LLC is, from a US tax perspective, is not seen as a taxable entity, unless of course you make an election to make it a taxable entity. But on the Canadian side, when you read the Canadian tax legislation and when you look at the guidance from Canada's side, an LLC is considered a corporation. Okay. Now, when a Canadian has a property here in Florida and rents it out, generates some form of income, you must file a tax return here in the United States because you've generated some sort of income in the United States that's taxable here. The Canada-U.S. tax treaty, like the very many tax treaties that the United States has with other countries, wants we want to avoid double taxation, right? So generally speaking, the Canadian will get credit dollar for dollar for the most part, and I'm really simplifying this. They will get credit dollar for any U.S. tax paid on their Canadian tax return. The LLC creates a complication because it's super useful here in the state of Florida to set up an LLC, but because it's considered a corporation in Canada, any taxes paid in the United States, we don't get credit for, leading to a double taxation situation. So we often look to other structures, sometimes LLC to C Corp to Canadian Corp, which allows a flow through, all right? Or we may use, I think you guys use limited liability partnerships as well. And that gives us some protection, at least up to the contribution amount, which would be the equity that you put in, right? But I don't want to go down this rabbit hole because this is more something for a cross-border tax specialist whom I will be interviewing in greater detail. But I do want to go into the LLC structure and what it is, because it is still useful in some cases for Canadians, but Canadians don't really know what an LLC is, right? They're very familiar with the corporate structure. They are somewhat familiar with a partnership structure. LLC is, you might as well be speaking Greek or Chinese. I don't know what the hell you're talking about. Why don't you explain, just from a basic Law 101 standpoint, to somebody who just has never heard of this structure, what it is and what it is meant to achieve?
Sure. So an LLC, which stands for a limited liability company, is it's a legal entity. It's a structure that allows the individual to be separate from the legal entity to allow for protection, liability protection in the event of a lawsuit. So it's a creature of state statute. So each state has rules, statutes that govern their individual LLCs and how they're structured.
So there's no federal legislation for LLCs. It's state by state.
It's a state creature. It's an entity that's created based on state statute. Okay. Now, like you mentioned, LLCs are pass-through entities from a tax perspective. You can elect to be treated as an S corp, or you can not file an election with the IRS, and then it's treated by default as a partnership, and the money flows from the entity through the individuals. Like you mentioned, it's a pass-through entity. Certainly, it's the most common form of entity for buyers and holders of real estate in Florida. I imagine in other states too, but at least for our purposes, by far the most common vehicle. And the reason that it's the most common vehicle for property owners of investment property down here is that it allows that ability to separate the individual from any liability that they may incur. Perhaps you buy a rental property, you have a tenant in there, the tenant slips and falls and breaks their neck. Yep. Well, if you owned it in your individual name, you could be subject to a lawsuit individually, and all your personal assets could be subject to a judgment. If you own it in an LLC and that LLC has no other assets other than the property, that's the extent of the liability. So there's some nuances to that with if you're a single member or a multi-member, and can the court what's called pierce the corporate veil. That's beyond the scope of this discussion. But for all intents and purposes, owning a rental or an investment property in an LLC is by far the most common. It gives you liability protection. It offers a lot of flexibility with a lot of the corporate other entity types. For example, a C corporation. There's a lot of corporate formalities that have to be adhered to, meetings and minutes. LLCs kind of give you the benefit of the liability protection with the flexibility of not having a lot of the legal rigidity that comes with some of the other entity structures.
Right. So maybe like a less involved minute book, less involved declarations.
That's right.
Right.
Easier administratively. It's much more inexpensive to maintain. It's, I believe, $135 a year to file your annual report with the state. You can get an LLC filed with the state online within, it takes me 10, 15 minutes to file one. Usually within 48 or 72 hours, it's active and up and running. So, if you buy a property and you realize, I want to put it in an LLC, as long as your contract allows you to assign it, you could do that a week before closing, and usually that's not a problem. So it's certainly the most common for all those reasons: flexibility, cost, ease of administration, and then of course the liability protection.
Okay. So let's pivot over to now a C corp, which is a very common thing that we utilize when a Canadian is expanding a business into the United States. So I'm going to just drift a little bit off from pure real estate right now because I have you here and I want the free advice. So a C corp, what I know a C corp as, it's very similar to the corporations we use in Canada in the sense that it's a closed entity, meaning that it is taxable in and of itself and then makes a dividend distribution of its retained earnings. Can you explain what a C corp is and how it differs specifically from an LLC?
Sure. So I'm not a corporate attorney, so I don't want to butcher this too much. So take this with a grain of salt. Yeah. But, the C corporation, it's a different entity structure. There's obviously different tax treatment than an LLC. As I previously mentioned, there's going to be some more rigid record keeping and administrative requirements. That probably the biggest difference that most people point to as anti-C corp structure is that there is the issue of the double taxation. So income that comes into the C corporation is subject to tax at the corporate level, but then all the dividend or profit that then gets passed through to the individual shareholders is then also subject to taxation. So you are getting hit with that double taxation, which is why a lot of people are anti, C corp, especially for real estate, because some of the other factors with C corporations that allow, why would the largest corporations in the world be structured as C corps? They have to do that for different, banking and fundraising rules. So, big corporations are C corps for various reasons when it comes to raising money, being listed on federal stock exchanges, for that matter. Again, that's kind of beyond the scope of this conversation.
Right. But for the smaller operation, it's probably not the most advisable.
I work with, plenty of local, investors, developers, contractors, and I would say all of them, if not all of them, 99% of them, all have their businesses structured as an LLC, often with an S corp election. And then, of course, there might be multiple layers of LLCs where a parent LLC will own subsidiaries. And that's probably the most common structure to separate maybe an operating business from maybe a holding company.
Yeah. No, I had a US, when I used to do US tax, I had a US client that had LLCs in every single state, and it was just a mess.
With our Canadian investors, we see them use an LP, right?
And that's the final structure
LP
I wanted
then
to.
Has a general partner, right?
Yeah,
and a limited partner,
right?
The limited partner takes
the investor.
Is the investor. The general partner is another LLC.
That's right.
And that LLC takes the liability for the partnership, and then beneath that, they layer it with additional LLCs that each individually own an asset.
Okay.
Right.
So,
and that's pretty common with an LP structure.
Right. So the final structure that I did want to talk about is a partnership, a limited partnership. And once again, I don't want to get into like the huge nuances of structuring a cross-border deal, because I am going to interview a specialist on that, like on structuring something cross-border because it's it's outside of my scope of practice.
And there's so many different variables.
And there's so many
right?
nuances.
Because
with
where's the money coming from? Is it coming from a corp?
Yeah.
What's that investor's specific situation? Then you got to get their Canadian accountant on the line and talk to the cross-border guy and kind of figure it out. And
but from a basic standpoint, though, a limited partnership, or sometimes I see a limited liability partnership, which we have LLPs, but those are generally limited to like law firms, accounting firms, professional firms
over here,
right? So a limited partnership, why don't you explain the basics of a limited partnership, how it works, how it limits liability?
Sure. So with a limited partnership, again, another different type of an entity structure, you're going to have a general partner and a limited partner. So two different types of partners in that partnership. The general partner is going to be, effectively think of it as the operating partner, the partner who's going to do the heavy lifting, do the work. They're going to be, the one managing the operation. That partner often, and again, the typical lawyer answer, it depends with, how it's structured, who the partners are, how complex their organizational tree is. But the general partner, the managing partner, if you want to think of it in that context, the person kind of doing the heavy lifting, organizing all the activities. The limited partners are really passive investors, for lack of a better word. So if somebody wanted to bring in some investors who just want to be strictly capital partners, not really be involved and really just get a return on the investment, they would be deemed a limited partner, to really simplify it. And the person who's boots on the ground, kind of running the show, whether it's the developer, the general contractor, the group that's putting the project together, they would be deemed the general partner.
Okay. Now legally, I know north of the border, and I'm not a lawyer, but legally my understanding is that the general partner is the only one that can call the shots in an LP structure, and the limited partners are truly limited to their capital contributions, right? Is this the same sort of thing here in Florida? Like the limited partners don't call the shots unless they are also part of the general partner.
I would say that's again, it depends. The typical lawyer answer. It depends on what your limited partnership agreement is. So the LPA or your limited partnership agreement, which you should always have, regardless of if you're best friends for life or if you're working with somebody for the 30th deal, have an LPA, have a partnership agreement that outlines all the rules, responsibilities, and rights of both partners. And like you mentioned, pretty much that goes with the territory. The general partner is going to call the shots, and they're going to say, listen, this is what we're doing. I'm going to have the rights and responsibilities to manage this. And the limited partner is really just going to be along for the ride. Now, of course, you could carve out restrictions with respect to that to kind of protect your interests. But for the most part, on a general level, that's right.